Joining us now is Chris Grisanti. He's the Chief Market Strategist at MAI Capital Management. First of all, Chris, welcome. It's great to see you.
You too, Kelly. Nice to be with you again.
Second of all, so you are in the camp that says, the economy looks pretty good. Normally that would underpin stock performance. Do you think the president's populist push, whatever we're calling it, let's not use a regulatory word, is having an impact here, though?
I do. Certainly, it's really sector by sector. It's like having little landmines in an otherwise very nice environment. So you got the credit cards today. You might have another populist theme tomorrow that affects a different sector, maybe healthcare. So you got to watch out for that. But the economic backdrop is as good as I've seen it in probably 5 years. So that seems terrific. Valuations, of course, are a different matter.
Right. And we mentioned, with Visa and Mastercard under pressure, the president, of course, may cap fees, like you're pointing out. It's also he's supporting the swipe fee legislation that obviously would do a lot more to affect their business models. But would a guy like you, who's seen a lot of these announcements come and go, look to pick up stocks like these on this moment of weakness?
Yeah, I mean, Visa and MasterCard are not cheap. They never are. But this swipe fee stuff is really the important thing that's happening here. It's not the 10% cap, which really doesn't affect Visa and MasterCard. But the swipe fee, it goes directly for their geese that's laying the golden eggs. So that we need to pay attention for. And I wouldn't underestimate the populist surge here. So I think this swipe fee legislation actually is worth taking a step back. And I actually wouldn't jump in and buy Visa and MasterCard today. I'd wait for some clarity because all the Democrats will vote for it. So you need, a half dozen Republican senators to get on board. And I think the train might leave the station. So I think there's more risk there than the market thinks.
In January, it still is January, when people were putting together their year aheads, Chris, they were able to build a story that was more about deregulation. And the president's going to get his Fed board. They're going to be deregulating. That's going to help the financial stocks. You've got the economy. Now, all of a sudden, the narrative is flipped. We don't know if the president's going to get his Fed board. We don't know what's going to happen with that deregulation, whatever's going to happen with the financial stocks. And now he's throwing more regulation at all these different parts of the market. Is that going to remain a bigger overhang, or do you think they're going to shake this off and move back towards highs?
Kelly. No, I think as long as corporate earnings come through solid, and I think the president is savvy enough and tuned into the business community enough that he may tinker on the margins, but he's not going to do something that's so dramatic that it would stall the earnings growth that is really pushing the market ahead. So I think that the problem is valuations, not the economy. I think the U.S. economy is like an ocean liner that is very difficult to stop once it's gotten going, and it's really going full steam right now.
So you like Dell, is that right?
I do. That's our secret, right? That's our secret chart.
Mystery chart.
Right. And I do because obviously, these data centers are a huge thing for Dell. They're the largest provider of servers into these data centers, and we're talking about hundreds of thousands of servers. And the important thing here is that unlike the internet bubble of the late 90s, the companies that are driving this are extremely well heeled. You've got Microsoft and Amazon and Google, and these guys have the money, and they will spend it, and they don't want to fall behind to their competition. So the good news is I think this spending continues for 2026. The bad news is I think it continues to inflate a bigger and bigger bubble as we get down the line. But I don't think that's yet. I think we're in the 5th or 6th inning. I don't think we're in the 8th inning. I
think a large portion of our audience agrees with that. So where else would you be looking? We showed UPS, so that's a stock that,
Sure.
Every time I wrinkle my nose at one of your stock picks, I know you're probably onto something.
Yes, no, I have something I call the gag factor, Kelly. So if I can make you or other investors gag, that's a terrible idea. I know it's not consensus, and I know it has a pretty decent chance of getting investor support in the future, and then the stock price goes up. So UPS is certainly one of those ideas. The stock is down more than 50% from its highs. Amazon is yesterday's news for UPS. It's taken them 2 years to kind of wean themselves off. It's getting over a bad relationship. So there's 4 things that's great about UPS. Nobody likes it. It's got the gag factor. Earnings are finally starting to come through. It's one of the few inexpensive stocks with a great balance sheet. And this is the favorite part, is you get paid 6% in a safe dividend while you wait for all these things to come true. So I think that's pretty potent.
Every time you talk about it, I think he's right. And, maybe I'm going to own a basket of Momo stocks just in case. It's like my hedge is the high flyers, right? Just in case.
Sure, we'll own a little of each.
Yeah. Chris, thank you as always.